This audio podcast that you are about to hear is from an August 6th virtual live event sponsored by the Hellenic Society Prometheus. The moderator is Dr. Alex Spiliotopoulos. The presenters are Mrs. Arsenoi Laniotis, attorney at law, and Mr. Theodore Vakrinos, attorney at law. The questions at the end of the presentation were posed by the live audience.
Today, we're bringing to you two very good friends of Prometheus, Mrs. Arsenoi Laniotis and Mr. Theodore Vakrinos, who will discuss taxation issues of interest to Greek Americans, as the Greek government has tried to enforce a new law taxing Greek citizens on their worldwide income. So this presentation will focus on various issues relating to this change, as well as issues related to taxation in general. At the end of this presentation, we will have a short question and answer period based on questions you have submitted to date. However, for those of you who have additional questions or questions may arise during the presentation, we encourage you to use the online form we indicated in our flyer or type in your question in the chat box of the YouTube window. Before we begin, a few words on our presenters. Ms. Arsenoi Laniotis is a Greek-American Brazilian attorney based in Newton, Massachusetts. She practiced law in Athens between 1997 to 2016. She specializes in U.S. Greek estate planning, post-death administration, property transactions, and related tax matters. Her law firm, Laniotis Law LLC, collaborates with attorneys throughout the United States and Greece, including the law firm of her daughter, Myrtos Stavridis, which is based in Athens. Mr. Theodore Vakrinos is a graduate of the Aristotle University Law School in Thessaloniki and did postgraduate work in Germany. He is a member of the Athens Bar Association and has been working in the US since 1981, where he's registered as a foreign legal consultant in various states, including Texas, California, Washington, Virginia, Illinois, Massachusetts, Washington, D.C. His practice involves various applications of Greek law, mainly taxation and inheritance cases. So without any further ado, we start with Mrs. Laniotis to talk to us about the laws on this side of the Atlantic regarding foreign property and income. And following that, Mr. Vakrinos will discuss the Greek side of things, among other issues. So, Ms. Laniotis, the floor is yours.
Thank you very much. In 1997, U.S. Senator Don Nichols said, "The present tax code is about 10 times longer than the Bible, a lot more complicated, and, unlike the Bible, contains no good news." I believe that this is an accurate statement regarding our current federal tax code. To make matters even more complicated, we, as U.S. citizens and U.S. green card holders, are also subject to municipal and state taxes. My presentation is intended to give U.S. citizens and U.S. green card holders with ties to Greece a bird's eye view of the federal tax landscape. I estimate that this is more than the tip of the iceberg, perhaps half of the iceberg. So please be aware that there is more iceberg ahead which cannot be covered in this presentation. In addition to reporting taxable events, U.S. citizens and green card holders are required to report information which does not entail taxation. One of the most complicated reporting requirements pertains to foreign bank accounts. This reporting requirement is triggered when the aggregate amount held in our non-U.S. bank accounts exceeds the threshold of $10,000 US at any time during the calendar year. This reporting is complex for a number of reasons. First, we are required to list the highest balance for all our bank accounts in US dollars. This requires us to use the US dollar conversion rates published on the Treasury's Financial Management Service site at the end of every calendar year. Second, all bank accounts must be included. This means bank accounts which contain minimal balances, jointly held bank accounts over which we have signature authority, as well as the bank accounts of our children. This is an example of the reporting requirements, which hopefully will clarify some points. Let's say I have the following Greek bank accounts. So I have one account jointly with my sister, which had a highest balance in February of 2019 in the euro equivalent of 3,000 US dollars. My underage child has a Greek bank account, which had a highest balance in the euro equivalent of 3,000 US dollars in August of 2019. And I hold a power of attorney from my mother, which grants me signature authority over her Greek bank accounts, which had a highest balance in the euro equivalent of 4,000 US dollars in October 2019. And I also hold my own personal individual account, which had a highest balance of a very small amount, 10 euros, let's say, in December of 2019. Well, the aggregate highest balances in my jointly held account, that of my child and that of my mother, would trigger the reporting requirement for all of my Greek bank accounts, including my own bank account with a measly highest balance of 10 euros. The form for this reporting was formerly known as the F-bar. We still often refer to it as the F-bar, but it is currently the FinCEN Form 114. Hopefully we can just remember 114. Due to time issues, it is not possible for me to cover all reporting requirements, but I'd like to stress that there are analogous reporting requirements which apply to foreign stocks and securities, foreign mutual funds, and foreign life insurance, which has a cash value. So if we're not taxed upon all of this, what are we actually taxed upon? Well, as U.S. citizens and green card holders, we are required to report and are potentially taxed upon income from Greek sources. These are some examples of Greek income sources: Greek pensions, Greek salaries, interest from bank accounts held with Greek institutions, dividends from Greek entities, sale of assets and property, which is located in Greece, gifting of assets and property located in Greece, inheritance of assets and properties located in Greece, and finally, rental income from properties located in Greece. In my personal and professional experience, Greek rental income is one of the most common reoccurring sources of income for U.S. citizens and green card holders. So I will use this example to illustrate how this type of income is actually handled by the IRS. So rental income from Greek properties must be reported to the IRS on Schedule E. While this is treated as foreign income by the IRS, a significant number of deductions are available to U.S. taxpayers, such as taxes paid to the Greek authorities, income taxes on the rental income. Real estate taxes are also credited by the IRS. Other deductions could be repair and maintenance of the maintenance fees which are paid. Repair and maintenance expenses for the property, any management fees paid for the property, depreciation for up to 40 years, mortgage interest, and travel expenses. And don't quote me on this, but I believe that one trip to Greece is actually deductible. But please confirm this with your accountant. Two other taxable events which are commonly encountered by U.S. citizens and green card holders are inheritance and gift conveyance of property which is located in Greece. Although they are not recurring events, they can often be complicated from a tax perspective. To illustrate this, if my mother were to gift a property to myself and my sister in equal shares, the tax ramifications of that gift might be very different for each of us, depending upon where we reside in the U.S. As a resident of Massachusetts, I would not be subject to a state gift tax because there is no gift tax imposed in the state of Massachusetts. But this might not be the case for my sister if she resides in a state which does impose a gift tax. For the same reason, the tax ramifications of my sister and I inheriting the same Greek asset, 50% each, could have vastly different tax consequences for each of us, depending upon the state where we reside. This is one of the reasons why I often suggest that my clients consider gifting their Greek properties during their lifetimes and retaining a life estate, which is known as epikarpia in Greek. When we gift during our lifetime, we're in the position to determine the tax consequences of our gift at that time. Just to clarify, this is not always the preferable means of conveying to our heirs. It actually depends on the age of the person who is receiving the gift, the donee, and the general financial situation of the family. But in general, it is something to be considered. So I'm certain that this is a question in all of our minds at this point. What happens if we fail to report Greek bank accounts, stocks, securities, mutual funds, life insurance, or income from Greek sources? Well, with respect to Greek sources such as stocks, securities, mutual funds, life insurance, or related items which are not necessarily taxable, since we are not taxed on these reportings, since we're not taxed on these reportings, there is no financial penalty. However, failure to report this information could result in criminal and civil prosecution. As you might imagine, failure to report income from Greek sources could result in hefty penalties, since some taxes might be owed, and failure to report this income could also result in potential criminal or civil sanctions. So I would like to leave you with a few tips for US citizens and green card holders with Greek income or assets. The first tip is to maintain accurate and updated records, including bank account statements, Greek tax declarations, title and sales, purchase documents, rental agreements, and all receipts for any expense. I realize that's counterintuitive in many ways, but as US taxpayers, we certainly require our receipts for any type of expense that's related to our assets in Greece. My second tip is to seek professional assistance with the reporting requirements, and most importantly, with any corrections to reporting. So failure to report must be corrected in accordance with strict IRS deadlines and must include an acceptable reasonable cause statement. It is therefore best for these matters to be handled by a professional who has experience in this area. And full disclosure, I do not handle IRS or other tax filings, but I do collaborate with international tax attorneys and accountants who handle these matters on behalf of my clients, and I would be happy to put you in touch with these people and who can assist you. Feel free to contact me. Thank you very much.
All right. Thank you so much, Mrs. Lainotis. And now, Mr. Vakrinos, the floor is yours.
Thank you. Although the Greek code may not be as thick as the American code, it has been changed so many times and has been replaced or allocated so many times, so even we, the professionals, cannot really keep a track of it. Even at this time, changes are taking place, and tomorrow or the day after tomorrow, we may have changes on the existing changes. Having said that, I will try to give you some basic principles of the Greek tax system, but especially to give an idea what is going to happen or how residents of abroad, in this particular case, Greek Americans, should behave with reference to possible tax obligations in Greece. Based on the Directive 1067 of the year 2015, residents of abroad are obligated to submit income tax return in Greece only if they have obtained or if they obtain real income in Greece, which is taxable in any way or exempted. However, in case that a resident of abroad, like a Greek American, for example, has only a secondary residence in Greece or an automobile in Greece without an income, without any other income, or without an interest-bearing bank account, he or she is not obligated to file income tax return there. In this particular case, the only obligation would be actually to keep a track of the fact that they do not obtain any other income-producing property, or they do not incur in any transaction that may produce income in Greece. Now, residents of another country, like Greek Americans, who may own income-producing property, or they may have inherited income-producing property in Greece. And then they have, of course, to submit an income tax return, which is taxable based on the height of income and based on the tax bracket they belong to. And I'm getting as an example, if someone has just rental income producing property and they get a rental income, the following brackets apply to that income. From 0 to, actually from income, from rental income, that it is up to 12,000 euros income from rental property, the tax bracket is 15%. From 12,001 euros to 35,000 euros per year, the income tax is 35%, and from 35,001 euros all the way up to 45%. In addition to that, there is in Greece, as we call it, an contribution or solidarity contribution, which in Greek we call it isphora αλληλεγγύης. That contribution is based, of course, on the reported income, and it fluctuates from 2.2% to 10%. But the first 12,000 euros are not taxable on the contribution, on that solidarity contribution tax. Now, in addition to that, the issue that may come up is, all right, when and how do we submit the income tax return in Greece in case that residents of abroad have income over there? The last few years, the only way to submit the income tax return is done electronically. So most of the residents of abroad, they communicate with their accountant or their lawyer, or someone has access to electronic filing, and they submit that income tax return. The only way that a tax return is submitted physically is only we have an estate subject. In other words, we have a deceased and someone has to accept inheritance, then the initial inheritance tax return has to be submitted in person. The other question would be the deadlines. When do we submit the annual income tax return? That changes from a year to year. Now, this year, due to the COVID-19 epidemic, the initial deadline was the end of June. Then it was extended the end of July, and as we speak is August 28. So please be careful and trying to communicate with your accountants and your lawyers, or if you can handle that on your own, try to file the income tax return electronically by August 28. This is very important because if you do that on time, then any credit you may get because of reduced rental payments would apply to the real property tax, which is called ENFIA. So the requirement in order to get any credit to ENFIA is to submit on time this year's income tax return. And most likely, that credit is going to be given by the system automatically without submitting any supportive documentation. As to the individuals who have no, or as to the individuals who live abroad, another obligation by the tax system is to have a tax representative, or as we call it in Greek, φορολογικό εκπρόσωπο. That tax representative has only the duty to receive correspondence from the tax service. The tax representative is not liable for any wrongdoings by the taxpayer. So it is also important to know that your tax representative is not someone who could represent you before the Greek authorities unless he has a specific power of attorney. Other than that, this year we have some distinctive differences because of COVID-19. The difference is that several of the property owners who might have collected rental income, they could not do that either on time, or they could not collect all the rental income because their tenants could not afford it, or their tenants were laid off, or in any case, they could not pay because they didn't have the money. So the government issued a directive in April stating that initially for the first months of April and May, they may pay only up to 60% of the agreeable rental income. That two-month term was extended to include June, and now it was extended under certain terms and conditions until the end of August. That means the real estate owners who collect rental income, they may get reduced income by 40%. Since several property owners protested that, the government decided to give to them some relief, stating that if they register themselves on a certain time for those months from April to August, then they get a credit which is going to offset their real property tax, which is going to become known in September. In addition to that, of course, they are not going to be taxed on the 40% discount or the 40% less income that they're going to receive. Other than that, we have to say that the real property tax of this year was expected to be less than the previous year. But because of that pandemic situation, the government, the current administration, decided at least to approve the deductions that were enforced last year, and that would apply to this year as well. And the individuals who are going to have less income due to COVID, they are going to get a further deduction based on the reduced income they will be receiving for this year. Another thing that has to be taken into account, of course, is someone may ask, all right, what about if I do not file my income tax return on time, or if I do not pay the installments of the income tax regularly? If someone does not file the income tax on time, there is a specific penalty, and that specific penalty is 12.40 euros per tax return. And if someone misses a monthly installment for the first 3 months of delay, there is a 0.75% penalty, and after the first 3 months, the penalty goes up to 10%. Something has to be also taken into account. If the taxpayers who live abroad, but also the taxpayers who live in Greece, pay their income tax as a lump sum payment by August the 28th, they receive a 2% discount on the amount of the tax. In addition to that, if someone files later on misses the enfia, let's say, for 1 or 2 months, then of course there is an additional penalty to that. There's something also, I'm going back to the income tax return, based on the current administration regulations, the income tax can be paid in 8 installments, which starts in August. However, because they extended the filing term of the income tax return this year, by the end of August, someone has to pay 2 installments. The one that had to be paid initially in July and one that should be paid in August. So please take into account that by the end of August, you have to pay 2 installments. And as I said, the income tax can be paid in 8 installments starting August, and the first month of which is going to bear 2 initial installments. The enfia, the real property tax, will become known in the middle of September, can be paid in 6 monthly installments, the last of which will become due in February of 2021. Other than that, I have to say something which may not be applicable to the Greek taxes, but may be of interest to our fellows Greek Americans. One is the κτηματολόγιο, and for those who own real estate in the municipality of Athens, they have until October 1st to log into the κτηματολόγιο website and make correction or replace any false data. Again, the term is October 1st. After that, they may have to follow a judiciary way, which will be also costly and time-consuming. Another situation would have to do with the correction of the square meters or square footage of your real estate. As you may know, for the ones who own real estate in Greece, along with the electrical bill, we are getting the municipal tax, which is collected along with the electrical bill. It was usual actually in the past, when someone was about to develop a property, to file a petition to the zoning office or polyodomia in order to get the approval for developing a real estate. But while the development was on the way, it was again very common to change the guidelines of the initial plans according to the property owner's wishes. And that it was usual because at the time there was not that many, let's say, that many restrictions, or there was no observation by the state authorities. Now, since they found out that very many pieces of property, especially the old ones, that they were built until the 90s, that the square footage or the square meters of their property may not coincide with the square footage that was declared in the electrical bill, the government is giving the opportunity to the property owners to go to a specific link in order to find out whether the square meters declared in their electrical bill coincides with the square meters reported in the Epsilon 9 form. If those figures coincide, there is nothing else to do. But if the E9 square footage or square meters is higher than the square meters listed in the electrical bill, then you have the chance to correct it without any penalty or without any additional amount. And there is a specific term to do so. And that term is until the end of August. the August 31st, you have the ability to go into a specific link and to figure out whether the data of the E9 form coincide with the data of the electrical billing statement. And that particular link, and I can give you that at this time, it is called Tetragonica, Tetragonika, Tetragonica, gov.app.gr, tetragonica.gov.app.gr. Over there, you will see if there is any discrepancy in the square meters of your real estate property. Other than that, I have nothing else to say, and I will welcome any inquiry you may have. Thank you very much.
Thank you, Mr. Vakinos. That was great and a very, very detailed presentation of all the issues related to the Greek tax law, and I'm sure people will appreciate that. At this point, we have a few questions that we received, and I think most of them have already been addressed by you and Mrs. Lainotis during your presentations. However, I'll just repeat them so that we can have some, a summary of what we discussed so far. So here is one. I'm a tax resident in the US and I have property and bank accounts in Greece. Do I need to declare them to the IRS? And how will I be taxed?
The property per se is not reportable, but the bank accounts are. Again, if there's an aggregate balance in a particular year of over 10,000 US dollars. So that would be the euro equivalent of $10,000. And that is for the bank accounts. With respect to the property, there would only be a reportable and taxable event if the property were inherited, gifted, sold in a particular, or purchased in a particular year, and of course, if there's rental income.
Great. Next question. I'm a tax resident of Greece, but I live and work abroad and hold a bank account abroad. Will the tax authorities check me?
If you are a tax resident of Greece, and you have income of any kind outside of Greece, the principle of the Greek tax system is that you are reporting the worldwide assets. That means you are reporting the income collected from assets outside of Greece. Of course, Greece has bilateral treaties with very many countries in order to avoid double taxation. So based on that treaty, the Greek government is going to give you some credit for the income collected abroad. On the other hand, it has to be pointed out that the credit is not €1 by €1, but there is also a certain percentage that eventually you are going to have double taxation.
Excellent. Next question. I'm a tax resident of the US and wish to buy property in Greece. What should I watch out for?
Right. Well, from a U.S. perspective, the issue would be any reporting requirement in which I do not anticipate for a purchase. So I believe that it's actually a Greek issue in terms of how it would be paid and clearly the taxes that would be paid in Greece. So I'll let Theodoros address that.
So if you are a resident of the United States and you would like to obtain property in Greece, I mean, of course, they will welcome you to do so under the current financial conditions. On the other hand, the residents of abroad can acquire an income-producing property or any type of property in Greece without any obligation, actually, to justify the amount of funds that is going to be spent in Greece in order to acquire income. Of course, the Greek government may ask what is the source of that particular income, but not how that income was obtained. So that particular individual may show that, okay, this is from my work or from my savings or from any gifts obtained abroad, and this is the income that we are going really to spend in Greece in order to acquire a property.
Very good, thank you. Another question. I maintain overseas bank accounts as a tax resident of the United States and plan to return to Greece. Are there any benefits in the context of migration?
In case foreigners wish to return to Greece and thus they become, of course, Greek tax residents, they have the right to relocate and transfer their households within 2 years, a car per family, and their money without being asked where the funds came from. The capital is not taxed in Greece, and it is supposed to have been taxed abroad. For all these benefits, they are staying abroad for at least 3 years is a prerequisite.
Another question we have is, what is the best way for tax purposes to transfer property, real estate, securities, bank deposits, either in Greece or in the US, to one's heirs? Assume for the sake of the argument that neither the donor nor the recipient have an immediate need for this transfer.
Right. So let me just speak to the bank accounts, for example. An easy, relatively painless way of conveying a bank account is actually to place your heir on that bank account. At that point, it's not actually an inheritance. It's a commonly jointly held account. So obviously there might be some reporting issues in the US, but certainly there would not be any inheritance. So that's with respect to the bank accounts. Again, depending on the situation, I recommend a gift rather than inheritance, but it actually depends upon the age of the heirs, of the children, let's presume they're children, and generally the financial situation of the family. Because, for example, and correct me if I'm wrong, but my understanding is that most Greek families do actually give to even underage children. And that might not be a beneficial conveyance for underage children who reside in the US, or for very young people, young children in the US, because it might actually impede their ability to get financial aid or to obtain a first home buyer loan, etc. So there are other indicators that I think really require a family to seriously consider what they are intending to, what the goal is, and how they will be going forward. So I don't know if Theodoros has something to.
Okay, let's get an example. We have a Greek American or an American of Greek descent who owns or inherited property in Greece. And that individual has children or grandchildren. And he may not want to liquidate that asset, but he would like to transfer to his family. What would be the best way or the recommended way to do tax-wise? We know that based on the decree relation between donors or donees, beneficiaries or heirs, if a parent has a real estate in Greece and wishes to transfer to his kids or grandkids nowadays as a parental gift, there is a non-taxable amount of 150,000 euros. Any amount above that is taxed as if it was a gift. Now, as to the situation with reference to what is going to happen if I transfer the property to my children or to my grandchildren, and they may liquidate that without my approval, or they may use the funds otherwise. So the parents, especially when they have minor kids or if they have young children, they follow the way of transferring the property to their children or grandchildren by transferring the naked ownership or ψηλή κυριότητα by withholding the lifetime interest. That way, they are sure that as long as they live, it will be very difficult for their child or grandchild to liquidate the property, to sell, or to dispose the income otherwise. Which means at the same time that the father or the grandfather may use that property in Greece, collect income, or they can keep it for their own usage whenever they visit Greece. This is the best recommended form in transferring asset in Greece to the closest relatives. Of course, if they want to transfer to distant relatives, since we have very high gift tax, then we contemplate a different way, a combination between possibly gift and fictitious sale.
Excellent. Excellent. Thank you very much. Next question. Is a person who fills the annual tax form in Greece as katikos exoterikou and has no income whatsoever, is that person required to give the U.S. Social Security number to the taxation office in Greece? By the way, this person doesn't owns property, which he uses for himself only, and he has no bank account.
If that individual has no bank account, and if that individual has no any other income producing property in Greece, but just a house and or an automobile, then that individual is not obligated to file an income tax return in Greece. So that means that there is no necessity to release his Social Security number. The people who are obligated to issue Social Security number are the ones who file income tax return in Greece.
Excellent. Next question. If real estate is gifted to a tax resident of the United States, what is the U.S. federal tax obligation? And I'm assuming we're talking about property in Greece gifted to a tax resident of the United States. So
that's a little bit complicated because, as I said, there's also the state tax and how the tax the various levels compete with one another. So if this person would like to contact me, I'm very happy to discuss that over the phone.
Yes, because
so it's a bit complex, but
sense.
certainly the gift tax that's payable and will be paid in Greece can be brought to the U.S. It's a little bit tricky because of who is actually responsible for paying the gift tax in the U.S. and Greece. So I'm happy to discuss that over the phone.
Yes. And a final question we have, that's a specific question. We have somebody whose mother owns a piece of farmland, Elias, olives, in Greece, which is abandoned. And that person currently lives in the United States and hasn't gone back to Greece for a few years now. If she goes back and uses it and maintains it, or even sells it, what are the tax implications, if any, for that person in Greece and here in the United States?
If that individual owns an olive grove, let's say, in Greece, and she has not been there for years, assuming that she has been paying property taxes, etc., because now we are paying property taxes on agricultural land for the people who live either in Greece or abroad. Of course, they can sell their property in Greece, and for the seller's point of view, the only obligation would be just to submit a clear title. when we have a sale transaction, most of the expenses, or better to say all of the expenses, are borne by the buyer. That means the sales tax, which is currently 3%, the notary's fee, which including the registration to the land registry would be between 1.5 to 2%, and of course, any possibility of having a survey. The only obligation which is in the hands of the sellers is possibly the lawyer who may be hired by the seller in order to represent her in that particular transaction, or to make sure that the funds may be wired from Greece to the seller's bank account in the United States in this particular case. Since we are talking about bank accounts, there is something else that came to my attention just 2 days ago. Until recently, based on the existing policies, we were able to open bank accounts in Greece based on a power of attorney which was given to us by our clientele. So if there was a sale of a real estate in Greece, we were able to go to a bank and open an account in the name of the seller and deposit the sale proceeds in that particular account, Later on, if the seller wanted, we were able to file a petition to the bank and convert the euros into US dollars and wire to the seller's account in the US. As we were told 2 days ago. Now, the banks adopted a policy which does not permit to open a new bank account in Greece without the account holder's physical presence, which means that if we have a power of attorney for a client who lives in the US and who is directing us to open a new bank account in Greece, we will not be able to do so until or unless that individual visits Greece and presents herself or himself physically to the bank. I sent an inquiry to the legal department of Alpha Bank and now National Bank of Greece, asking what about if we have an elderly or a handicapped client who is unable to travel to Greece? Are they going to take into account those extenuating circumstances? They have yet to respond to me, but this is the policy of the banks at this time.
Great. Just going back for a fact to the question itself, and just to ask, how would things be complicated if the person who lives abroad hasn't paid ENFIA for that foreign land, for that olive grove, for years? How does this change things?
Okay, that could be changed, and especially if that fellow has not paid ENFIA and is willing, ready, and able to sell it. What we do with the help of the accountant, we go and we file or you may change or modify the E9 form, and we pay the ENFIA for the last 5 years preceding the sale of the property. So in this particular case, since the ENFIA was established in the year 2014, and if the property is going to be sold during 2020, we are going to ask to pay the ENFIA from the year 2015 to the year 2020. And by the way, the ENFIA for agricultural land is nominal. In most of the cases, they start from 50 cents and they go all the way to 10 euros. So, and they may pay some penalty, but that penalty really is not that high.
I see. And Anthony, I think you got a question that you want to ask?
I think you asked the questions that we are getting so far. If anything else comes in, I will jump in.
Okay. Then I don't know. Does either of you have anything else to add or discuss further, you think?
The only thing that I have, unless we brought it, it was the inquiry. If someone is a tax resident of the United States in this case and keeps bank accounts in both Greece as well as in the US or in another other country outside of Greece, is there any way to be taxed in Greece? So the principle is that since the bank account holder is a tax resident of the US, Greece has no right to check that individual's deposits either inside Greece or outside Greece. And that individual is going to be taxed only for the actual income he or she may likely to receive in Greece, for which he or she must submit the annual income tax return. But Greece does not check whether the bank account, whether that individual has a bank account outside of Greece and how that bank account was obtained.
Excellent. I think we got to the end of this presentation then. At this point, I would like to thank you both very much for your time, first of all, and the detailed information you provided. I can assure you that these are very complicated issues, as you very well know, and many of us are wildly misinformed in many cases, as we rely on friends and relatives to give us advice on these things because they're on the same boat or something. But with this in mind and your presentation today, I strongly advise everybody to reach out to you and the professionals on these matters for professional advice rather than advice from friends. So thank you very much again. We really appreciate your time, and I'm sure given the overwhelming amount of information and the details associated with what you presented, I'm sure that people will be looking forward to seeing the video and they're going step by step through the advice and information you provided today. And with that, we thank you very much, and we thank all our friends who were with us today on this presentation. And also special thanks to Anthony for all the help and support in this live presentation. And we're looking forward to seeing you in the next one, hopefully very soon. So stay tuned for more information. Have a very good night.
And thank you very much for hosting us. I would like to thank the moderators, Alex, Anthony, Elizabeth, and of course, Magdalini and the members of the board of Prometheus for honoring us with that particular presentation. Also, I would like to thank my co-presenter, Arsinoi, for a very informative and eloquent presentation. And hopefully, I myself, because I am raised and born in Greece, I would like to strongly apologize for my accent and some grammatical or syntactic errors. For that, I request your leniency. And for that, I only wish χρόνια πολλά for the ones who are named Sotiris or Sotiria for today. So, and I wish them all also to keep safe and healthy until the next time. Thank you very much to all.
Thank you. It's been an honor. Thank you so much.
The honor and pleasure is ours. Thank you very, very much.
Thank you for joining us. This audio podcast was produced by Anthony Apostolides, Event Management Consultant. Special thanks goes to the Board of the Hellenic Society Prometheus and Ms. Elizabeth No for technical assistance. We look forward to having you join us again for future live and recorded events from the Hellenic Society Prometheus.